Thank you for watching NTD Business. Coming up tonight, Governor Ron DeSantis looking to ban a certain type of investing in Florida. He says it violates the financial duty executives have to shareholders. Consumer prices actually rose in December instead of falling like previously thought. What do top officials say? A dramatic rise in home equity loans. Homeowners are increasingly taking advantage of this record level of tappable home equity. What are they using the money for, and what are the risks? Someone spent millions on an anti-Tesla Super Bowl ad. Find out who's possibly Tesla's biggest critic. Deep fake news anchors generated by artificial intelligence. Pro-Beijing bots have been pushing them on social media, where they repeat Communist Party narratives. That and much more coming up on NTD Business. Great to have you with us. Don Ma here. Florida Governor Ron DeSantis today said he's targeting the investment strategy known as ESG. The Corporate Finance Institute describes ESG as a system that shows stakeholders how to sustainably invest based on environmental, social, and governance, or ESG criteria. However, DeSantis says those criteria are used to inject political ideology into the everyday economy.
One of their big targets is domestic energy production. They do not like us producing more oil and gas. They do not want us to be energy independent.
He pointed out that ESG apparently violates the financial duty executives have to shareholders of publicly traded companies. They're supposed to make as much profit as possible by investing in the best available options.
Well, what ESG says is, no, we're not going to do, even if it would do a better return, we're not going to allow you to invest in certain areas. You're not allowed to invest in oil and gas. You're not allowed to invest in disfavored areas. So they're constricting the ability of people to invest your money, and obviously that means you're going to not do as well as you otherwise could have. Sometimes people will try to say that you do better with this, but that doesn't make any sense, because if you don't have ESG, you could invest in green stuff if it's profitable. There's no restriction on that.
The governor has announced a number of proposals for the next legislative session. He wants to block ESG investment decisions at the state and local level. He wants to eliminate consideration of ESG factors by officials when issuing bonds and ban the financial sector from considering so-called social credit scores. The next legislative session will be held in March. Newly released data shows December consumer prices rising from the month before instead of falling as previously thought. When the Bureau of Labor Statistics released the raw data, prices were down 0.1% last month. But after the agency recalculated for seasonal factors, including weather events, holidays, the consumer price index went up 0.1% in December. Federal Reserve Chair Jerome Powell and Treasury Secretary Janet Yellen have both urged people not to read too much into any one data point, but instead look at a variety of measurements over a longer time period. The January CPI numbers are scheduled to be released tomorrow. And homeowners are increasingly tapping their equity. According to data from TransUnion, more than 330,000 home equity loans were taken out in the third quarter last year. That's about a 47% increase from the same quarter in 2021. Years of rising home values have made home equity a tempting option. Banks also granted over 400,000 home equity lines of credit in the third quarter. This is up 41% from a year earlier. The rise in taking out home equity loans is part of a general increase in using credit. This as high prices for necessities like food and gas squeeze households. TransUnion said credit card balances climbed to a record high of $931 billion in the fourth quarter of 2022. That's a nearly 19% increase from a year earlier. And now joining me is Ted Rossman, Senior Industry Analyst at Bankrate.com. Now, Ted, we're seeing an increase in home equity loans. Now, this is amid an uncertain economic environment. Are you seeing that at Bankrate.com? And could you explain to us why this is?
We are, yeah. There's been high demand for home equity loans and lines of credit because a lot of people are sitting on increased home equity. So that's a positive. A lot of people have money that they can tap. Now, of course, the downside is people need extra money because the cost of living has gone up with high inflation. People are doing renovations, looking to pay for them. All types of loans have gotten more expensive over the past year as the Fed has pushed rates higher. So a lot of people are tapping their home equity.
And at bankrate.com, what are you seeing? What are people using the money for?
Home improvements and consolidating credit card debt are probably the two most common explanations. Now, the home improvement one is interesting because mortgage rates have gone up so much that a lot of people are finding it preferential to stay put rather than move. If you locked in a mortgage rate in the 3 or 4% range a couple of years ago, there's not a ton of incentive to move right now. So some people are saying, you know what? Let's just redo the kitchen or add a bathroom or whatever it is and stick around. Now, maybe that makes sense. I mean, it may be cheaper and easier than moving, and building equity is always a good thing. I mean, maybe these projects are adding value to your home. The credit card one also, I mean, it does make sense mathematically to pay 8% rather than 20, although I would say there, you might even be able to do better still. Maybe get a 0% balance transfer card, or you could get a personal loan as low as about 6 or 7% if you have good credit. That would be unsecured debt. So I guess in my view, the home equity loan makes more sense for home improvements than it does for consolidating credit card debt. I think there are probably better alternatives with credit card debt payoff.
Right. And I'd like to further ask you whether this is a good idea, because with the Fed increasing rates, we know they're going to end up somewhere around 5%, maybe even higher if the labor market stays strong. So is this a good idea?
Right now, the average interest rate for a home equity loan or line of credit is in the high sevens, usually something like 7.8, 7.9%. That's gone up quite a bit. So on a $50,000 loan, the interest rate hikes we've seen over the past year have pushed that monthly payment up by about $200 a month. So it is significant. In general, home equity loans and lines of credit make me a little nervous because you're putting your house on the line. So, it may be advantageous from an interest rate standpoint to trade your 20% credit card debt for, let's say, an 8% home equity loan. I mean, there are some positives to doing that. And when it comes to how to fund a home improvement, this can be I don't want to say inexpensive because rates have gone up, but maybe a less expensive product than some alternatives, relatively easy to get. You definitely want to think long and hard about the risk associated with putting the house on the line and also the interest rate.
So as we mentioned earlier, it varies from person to person, but if someone is thinking about taking out a home equity loan, how do they decide? What factors do they have to consider?
I think it's important to think about the interest rate, any fees that might be involved. How large is the loan? Are you going to be able to pay it off ahead of schedule potentially? I mean, that would be great to limit the overall interest expense. Home equity lines of credit have adjustable rates. So if the Fed keeps pushing rates higher, your rate's going to go up further. We think most of the damage has been done there, but that's another thought about maybe fixing your rate with a home equity loan. Even if you have an existing HELOC, you might be able to ask your lender to freeze that balance and freeze that rate and convert into more of a loan as opposed to a line of credit. But I think the general rules of the road here are, what's your rate? What's your term? How long are you going to be there? Is this project going to be additive to your home value and your lifestyle? That sort of thing.